Okay, this is problem 5-2A. We started this in class and I didn't get a chance to finish it. So let me start from the beginning. I may have to do this in two parts because it's pretty long and hopefully I won't just keep talking. But let's see. Um, like I was telling you in class, during different times of the year, a company will be both a buyer and then during other times of the year, they'll be a seller. So you're going to have your two different types of entries here. April 2nd, this company purchases merchandise on account for $6,900 and they give us the terms. All right, so we're purchasing merchandise on account. I want to record my inventory. So let's see, I'm going to debit my inventory for that amount. Here's my entry. I'll debit inventory for $6,900 and I'll credit my accounts payable because they tell me it's on account. All right, April 4th, we sold merchandise. Okay, in this instance, now we're a seller. Every time you're a seller, you're going to make two entries. Because we are under the perpetual inventory system, we want to keep track of our cost of goods sold perpetually every time we sell an item. So here for April 4th, we sold merchandise on account for $5,500. So that'll be my first entry where I'll record the sales of that item. So I'll debit my accounts receivable because it's on account. That's this customer now owes me that money, and I'll record the sales. The second entry I want to make every time I sell an item under the perpetual method is my cost of that sale. So that'll be my cost of goods. So every time you sell something, the problem has to give you the sales price and they have to give you the cost of that item. So here I'm taking it out of my inventory and I'm reflecting the cost of that sale. So I'll debit cost of goods sold, which is on your income statement as an expense account. It'll have a debit balance. Okay, let's see, on the 5th, we paid $240 freight on the April 4th sale. Let's see, the April 4th sale, they did tell us that it was FOB destination. And that means that the seller pays. Okay, we were the seller, so we're going to pay that freight. Now that freight was just a part of our sales. So we're going to record an expense of freight out. So we'll debit our freight out for the 200. Oh, hold on. I need to highlight that account or my line items. And let's see. So we're going to debit freight out for $240 and we'll credit our cash for $240. All right, let's continue. On April 6th, we received a credit from Dakota Supply Company for the merchandise returned on $500. All right, so we purchased this merchandise. Part of it was maybe it was defective or we just didn't want it. It was a wrong item, so we're going to return it. So what we're going to reflect there is that we owe this vendor less money. So I'm actually going to reverse what entry I made when I purchased it, right? When I purchased it, I'm debiting my inventory, I'm crediting my accounts payable. So now I'm sending $500 worth of this inventory back to that vendor. So I'll debit accounts payable and I'll credit my inventory to reflect that I'm taking it out of my inventory. So let's see, let me show you that entry. Okay, so there it is, accounts payable and is the debit for $500 and merchandise inventory is the credit for $500. Okay, let's move on. On the 11th, we paid Dakota Supply Company in full less the discount. All right, this was where we were calculating the discount. Now, what I want to do when calculating that discount is to see what do I owe Dakota Supply Company. Well, first we had the $6,900 of accounts payable to Dakota, and then we want to net what we returned of the $500. Okay, so the $6,900 minus that $500, so I owe Dakota $6,400. So that's where I'm going to debit my accounts payable for that. Oh, I'm getting all the accounts. You know what, I'll put the whole entry up so you can see it. But here, so here's my accounts payable, and I'm reflecting $6,900 minus that $500. So that's my balance to Dakota is the $6,400. Then what I want to do is calculate that discount because I'm paying within time. I'm paying within that the terms of 1%, 10 days. So here I'm going to reduce my inventory. Now my inventory will cost less because I didn't have to pay so much for it, right? So I'm going to credit my inventory for that discount. And that's what I want to reflect in my inventory account. If it was under the periodic method, what we would be crediting here is purchase discounts. What we're doing now under the perpetual method is we're keeping everything in our inventory account, and that will reflect our true inventory cost. So my inventory cost me less because I took advantage of this discount, so I'll credit my inventory for that discount of $64. So here, the balance of my entry, remember my debits and credits have to balance, so my cash will equal $6,336 is what I'm going to pay this vendor. All right, let's move on. On the 13th of April, we received collections in full, less discounts from customers billed on April 4th. Okay, on April 4th, we sold the merchandise, and it looks as if these customers are taking the discount of 1%. Like Andrew was saying in class, you know, customers now have a tendency to just take that discount, and then you have to go after them even when they're not paying within the time frame. And what happens in that case is they do lose their credibility. When the environment picks up, you know, you as the seller can pick and choose and say, you know what, I didn't like the way you handled paying us. We don't want to do business with you anymore. You know, so it's not good business practice to do that, and it's unfortunate that customers do take advantage of it. Okay, so let's see, on the 13th, right, we received the collections in full, less the discounts. So what I want to do, I want to record the cash coming in. I want to record this sales discount now. That's going to be on my income statement. That will be a contra revenue account because it's a cost of my sales. I'm giving this customer a discount to pay early. And then, of course, I have my accounts receivable that I'll be crediting. All right, I'm just talking, and what I should be doing is showing you the entry here. Okay, so here's my cash. I figure out my sales discount by taking, you know, the accounts receivable, what the customer owes us. If we go back up to the April 4th entry, we'll see that our accounts receivable, what this customer owed us, was $5,500. So that's what I want to credit in this entry. I'm crediting accounts receivable by the $5,500, and then I'll calculate the discount. 5,500 times that sales discount of 1%, that gives me $55. That's a cost of my sales, right? So I'm going to show that as a debit, and there's my cash of what we're receiving. Okay, let's see. I have like 2 minutes left. I'm going to have to break this. I can only post a 10-minute video out there. So let's see. All right, on April 14th, we purchased merchandise for cash of $3,800. So what I'm going to show is I'll debit my inventory because now I'm purchasing. Right, so I'll debit my inventory and I'll credit cash. They're saying that we, not that we paid it on account, but we actually paid cash, right? Purchase merchandise for cash, $3,800. So there's my debit to the inventory account. There's my credit to cash for $3,800. Right, let's see what we did on the 16th. We received a refund from the supplier for returned goods on the cash purchase of April 14th, and the amount they returned was $500. So I'm just going to reverse this entry, right? So now I'm returning some of the items to the supplier, to the vendor, and all right, let's see. Let me show you the entry instead of me just talking. So here we're going to receive cash back from the supplier, from the vendor, and I want to reduce my inventory for that amount that we returned. All right, that was on the 16th. Okay, on the 18th, we purchased merchandise From Skywalker Distributors, 4,500. FOB shipping point. That means that the buyer is going to pay for the shipping. We're the buyer in this instance. So we're going to pay for that shipping. And that's going to go into my inventory, right? Whenever you purchase merchandise and you have to do the FOB shipping point, that's part of my inventory cost. I want to include that in. And then they give us the terms, but that doesn't really pertain to us now because we're not paying yet. We're just showing that we did purchase the merchandise, but we did do it on account. So I'm going to debit, right, my inventory, and then show that I have this accounts payable now that's due. I'll have to owe that to, I'm way over time. All right, hopefully this didn't cut out. All right, that was the 18th.